Okay, so today we'll be continuing on chapter 17. We started this chapter on Tuesday, and this is continuing chapter 16's topic, but going a little bit deeper. All right, so we introduced to you on last week different types of cost. Remember, we have three main categories. We have materials, we have labor costs, those are direct category, and then we have an indirect category, manufacturing overhead. So on Tuesday we covered how do we journalize entries on purchasing materials, on using materials? How do we journalize entries, post them to T accounts on hiring people, and also transferring the cost of direct labor, indirect labor. Right? So let's just briefly go over the entries that we covered on Tuesday. So this entry here, what are we trying to do? Purchase materials on accounts. So this is the first step. Once customers give us orders, purchase orders from us, we have to purchase the materials related to the production side. Right? So if it's a bakery, we need to purchase materials on sugar, eggs, flour. Bicycle manufacturing line, we have to purchase the wheels, the steels. Those are the direct portions of the materials that you can see on the product. The most part of the things that you can actually see by your eyes on the product. Okay, so here we have two types of materials. One type, the main parts, the main materials, major ones that cost $350,000. So we first of all purchase, when we make new purchases, when we transfer beginning inventories of direct materials, this is the debit side, right? So when we purchase new products, over there, $350,000, and the indirect materials cost $17,000. Left side, we increase this asset account by debiting assets, purchase materials. Okay, we also talked about beginning inventory, the inventory that we carry on from last period, assuming it's $70,000. Okay, if we purchase this on account, the credit side will be accounts payable. If we pay by cash, the credit side will be what? If we pay by cash, the credit side will be cash, right? We debit materials, we credit cash. Okay? Now this is purchasing side. So once we purchase in materials, then when production team requests for materials to start manufacturing the products, what would happen? What will be the second entry? This is purchasing side, right? What about using materials? What do? When we start using the materials, we want to determine which part is the direct materials we're using, which part is the indirect materials we're using, right? So following this entry, this is purchasing in materials, increasing our asset, and then we assign the portion of assets as main materials into work in process, minor materials into manufacturing overhead. Okay, so here's an example that we assigned for this particular order $355,000 of direct materials into work in process. Okay, we're just reviewing what we covered on Tuesday briefly. Manufacturing overhead, again, $17,000. We assign it to, these are the indirect materials. So we separate the materials, the nature of it, the characteristics of it, into two categories once we start producing it. Okay, so first entry is just purchasing materials in. Second entry, when we start producing, manufacturing it, we separate the types of the materials into two different categories. This is this entry over here. Okay, so what was the third entry? Now we purchase in materials, we assign materials to start production, start producing the products. Then definitely there are people that helps us assemble the product. So we have direct labor. Direct labor, as opposed to that, we also have indirect labor costs, right? So we have another entry on separating the cost of labor, the wages, the salary you pay to these workers. Again, for those workers that help you specifically assemble the product, actually helps you generate the final goods. Those are the people, the wages we pay them, we call them direct labor costs. So once direct labor costs incur the $169,000 from wages payable, we assign it to work in process. Okay, the workers that helps us actually assemble the products. Now, indirect labor, give me some examples. Plant side managers, salary, janitors, salary, right? Two types of examples. Manufacturing overhead will fall under, manufacturing overhead will capture these indirect labor costs. Okay, so again, this is a category that captures the indirect cost, including direct material, direct labor, and then we'll be going over some of the other indirect costs that we also talked about on Tuesday. So this is the third entry we learned on Tuesday. First, again, purchase materials. Second, we assign them to work in process or manufacturing overhead. Third entry, we take care of direct labor cost and indirect labor cost. Okay, so wages payable, a portion of it becomes a part of work in process, a portion of it falls under indirect cost, manufacturing overhead. Okay, now before we end Tuesday class, we went over this example and also manufacturing overhead. So let's just briefly go over this example again because we spent quite some time on this and we have a homework problem very similar to this one. So we see a lot of T accounts here. How do we understand the top left one, materials inventory? So what does this 31,400 mean? Direct and also indirect, the ones that we're using, right? So we purchased in $47,000 and then we assign a portion when we start manufacturing the goods, a portion into work in process, a portion into indirect cost, manufacturing overhead, right? Here is after the fact you see the T accounts, right? So you're trying to pick two numbers to add them up. But for other problems, they definitely need to tell you how much goes into that category, right? Okay, so this is materials. Now from wages payable, we know that we hired people, incurred the salary we owe them, altogether $74,000. And again, we need to separate them into direct labor, indirect labor. Okay? Now if we take a look at work in process, the debit side, we see another number on the debit side, 53,900, right? So that would be coming from manufacturing overhead. So this is the portion that we'll be continuing on today. How do we understand manufacturing overhead? How do we transfer that portion into work in process? So remember production line, the three types of costs we just talked about, materials, labor, and we have indirect costs to take care of as well. They're still supporting costs, it's just more minor. So we take care of them all together at the end. We assign a portion to work in process, the 53,900, then that completes work in process cost category. Then at the end, we want to figure out what part of those work in process actually turns into completed goods. So that would be the $123,000, $123,000. So that transfers to finished goods. So today our main focus here will be continuing on this process. How do we understand indirect cost? How do we assign it based on the predetermined rate? Then how do we determine what portion of the goods becomes finished? How do we journalize that? Then how do we journalize cost of goods sold?
What would be the 36,000?
That will be the remaining indirect costs that we haven't talked about. For example, rental, utilities, depreciations, right? So the first two is the main ones, the indirect labor, indirect materials, and then the remaining, we add them all together.
And that would be including work in process?
That would, just a portion of it, 53,900. So we'll talk about how we decide on what is the portion that goes into work in process. Right? So just want to bring up this example again, what we're trying to do in today's class. The remaining parts, indirect costs, how do we determine it? And then finished goods, how do we journalize it? Cost of goods sold. Okay, so for overhead, we just talked about there are all other remaining overhead costs. So besides indirect material, besides indirect labor, we may also have plant assets that we need to depreciate. And we definitely rent a place, and we have to pay rentals. We have to pay utilities when we use electricity, water, heating systems, insurance on plants, facilities, property taxes. These are just some of the examples of all the remaining incurring indirect costs that we need to consider altogether as well. So this T account here, after a whole year of production line, we add up all the indirect costs. So it totals up to $73,000. Okay, but notice that this number, we only get to know this actual number when it comes to year end, right? Because utilities, we only know the cost after the fact when we actually use it, monthly basis, weekly basis. Rental, you may be able to guess an approximate number, probably will be fixed, but you may also, perhaps your landlord increases the rent. You may also need to change this. Depreciation, most likely if it's fixed depreciation by month, then it could be a same number. But it's also possible that if machines breaks down, we need to trade in new equipment, then we need to adjust depreciation as well. So what I'm trying to get to is that this number, $73,000, is after using all different types of machines, using the place. This exact number, we're only able to get to this number when it comes to year end. So what happens if we have a few job orders that we need to ship out by March 31st or April 30th or halfway through the year, June? We need to determine the cost of that in order to set the retail price, set the price that we want to charge our client. Okay, so this portion of the indirect cost, we're going to use a way to measure it, a predetermined rate, in order to assign a portion of indirect cost to this job, a portion of the indirect cost to the other job. So we don't misprice the service, misprice the product that we're charging clients. Okay, so how do we do this? We went over this rate very briefly. First of all, in the beginning of the period, we estimate the part of the indirect cost because we don't know the exact number until year end, so we want to just do a rough estimation, expect what is the total cost that may occur in this entire year. Okay, and then we use this number, we divide it by quantity of allocation base. Now this could be machine hours, this could be labor hours, or labor costs. So basically what this is what is the thing that drives the indirect costs? What is the main factor of causing these indirect costs? We want to divide it by an estimated quantity of machine hours or labor hours. Okay, so we predetermine this rate, use this overhead rate, and then multiply whatever hours, whatever machine hours, labor hours that occurred in one particular job. We use this rate, multiply the hours to get that indirect cost for that particular job. So for each and every order, we may have a different number of indirect cost, meaning the more machine hours is used for one job, the more indirect cost is assigned to that job. The less is used for this job, the less is assigned to this job. Okay, so unlike direct materials and direct labor, that we actually know the numbers, the cost of the products, cost of the materials we're using, the cost of the wages that actually incur. Indirect cost, we need to measure a rate up front because we don't know what's the total indirect cost that will incur in this entire year. So first step will be estimating the total cost, and we divide it by an expectation hours, expectation cost. Could be machine hours, labor hours, right? So once we figure out that rate, so first of all, how do we understand this?
The percentage of dollar that's going to go to from every manufacturing overhead dollar, that's not overhead.
You're very close. So what this means is for every direct labor cost incurred, every dollar of direct labor cost incurred, you will have 40 cents of manufacturing overhead costs incurred. Right? So if this particular job producing a certain product costs me, we need to hire an employee to work for us for 100 hours, then the indirect cost that goes into this job, we use that 100 hours multiply 40%, meaning for that job there's $40 of indirect cost. Okay, So how we understand this number is per dollar of direct labor cost incurred, there will be 40 cents of indirect cost incurred for that job, assigned to that job. And remember, this is just an estimation, a rate. We predetermine it in the beginning of the period, use it as a base to multiply the actual hours being used for each job. Then we can get the indirect cost we assign to that job. Are we getting it or no? Not sure. Okay, let's take a closer look at the 40% where it falls under. This is where the 40% is. We predetermine the rate. Then we multiply how many machine hours or how many labor hours. This is decided by the management level. What's the allocation base? Once we decide on that, multiply how many actual hours being used for this particular order, then this will be the indirect cost for that order. Okay, so if it's 40%, we decided this already. If there's 100 labor hours being used for this particular job, then the indirect cost will be $40 for this job. So you will be recording $40 here, transferred it to work in process, $40. Okay, so if it's 1,000 hours, then it will be $400 here. 10,000, $4,000 here. So the more labor hours, the more machine hours being used for each job, the more indirect cost is being assigned to it. Okay, because if we use labor hours as a base, think of it as a factor that drives indirect costs, then the more being used, the more cost should be assigned to that job. It requires more labor, requires more machine hours, and therefore there are more indirect costs assigned to that job. So when we cost customers, that job will be more pricey than the other job that doesn't require that many machine hours or labor hours. Okay, makes sense? Maybe? Right. Yes?
Can you go back to the step one just real quick?
Just calculating the rate? Okay, so the problem you see, definitely they'll be telling you what is the base to divide the total indirect cost. The problem will tell you if this is a product that heavily relies on machines, let's say puzzles. You need machines to definitely separate the board into different pieces. So if it's machine-intensive production, then they will tell you what is the expected machine hours. And you use that hours to divide the expected manufacturing overhead cost, you can get the rate. Then after this, per customer's order, just multiply how many machine hours has been used for this particular order. That will be the indirect cost for that order. Okay, now for labor-intensive production side, if it's gifting business, decoration business, most likely you would need to use actual manual hours as opposed to machine hours. You multiply, you divide it by estimated total labor hours, and then you multiply the actual labor hours used for this particular order. Okay, let's take a look at examples. Okay, before we go on to examples, this is the job cost record that we showed you earlier. Inputting direct materials on the left-hand side, the middle part, second category, direct labor. This is just capturing all the costs that relates to job number 16. Remember we talked about this 10 Excel DVDs example? Just continuing on filling out this job cost record. So the right-hand side, what we just did was to determine the rate of assigning indirect costs and then multiply by how many hours actually, or how many direct labor costs actually incurred for this job, number 16. So the right-hand side, it tells us that we have indirect costs, $80 assigned to this job. So if you add all three together, the cost for this job will be how much? $420 for this entire order. So if we want to determine the unit cost per DVD set, that will be 42. Because 420 divided by 10 DVD sets, right? Again, this is not the retail price. This is just the cost side. 3 different categories: materials cost, labor costs, and then we have indirect costs, which is very hard to assign to a particular job, and that's why we predetermine a rate to help us assign a portion of it to each job order as it happens in the year. Okay? Now, how do we journalize this? We talked about deciding manufacturing overhead. Let's say after a whole year, assuming we have 100 orders, altogether we were able to assign $67,600 to work in process, assuming after a whole year. So what does this mean? This means that earlier, remember, materials, we assigned it to work in process. Direct labor, we assigned it to work in process. Now this indirect category, we also need to assign a portion of it to work in process because these are the supporting costs as well. We're just taking care of it one at a time. And now it's the third category's chance to assign it to work in process. Okay? So we assign a portion based on the predetermined rate, remember, that we calculate in the beginning of the period. So as orders happen, we assign a portion to work in process, we assign a portion to indirect process, and the journal entries to assign it would be reducing manufacturing overhead, increasing work in process. So just like how we assign materials to work in process, we reduce the materials by $355,000, we add it to work in process, transfer it over. So here we're transferring over manufacturing overhead, the indirect cost, into work in process by reducing this category, increasing work in process. So it represents that these are the costs being processed, halfway done, almost getting there to finished goods. Increase to work in process. Okay, so work in process is an asset account. It represents all the assets, the costs of the production line that are not yet finished goods in the middle of the process. We're allocating them to the jobs, yes. Now this slide is showing a summary dollar amount, but as job happens, usually, for example, the $80 that we just showed on the job cost record, we will have a separate entry that says work in process 80, manufacturing overhead 80. So as job happens, we will journalize this entry. Transfer the cost from manufacturing overhead into work in process. Okay, now you will see the differences between the red highlighted number and the green highlighted number. So who wants to try to guess why is there a difference there? So this is a summary information. When it comes to year end, if we just look at this manufacturing overhead account, since this is year end, we actually know what are the costs that incurred. So we list them out line by line, right? But then the right-hand side, the green side, is a summary of all the indirect costs that we have been assigning to different jobs as time goes by. So when it reaches year end, based on the predetermined rate, and then we multiply by whatever machine hours actually incurred, altogether, we assigned this dollar amount to the jobs. But the actual amount that incurred in this year is $73,000. So the difference is the part that, that's okay. So the difference is basically we misallocated a portion. Because remember, we just estimated a rough rate in the beginning of the year. Expect that would be very close to the actual overhead rate. Okay, so when it comes to year end, we need to do some adjustments based on the differences. Very likely there will be differences because usually expectation, the estimated rate, will not be exactly the same as what actually happens. Right? It will be close, but probably missing a few $1,000s, a few $100s. So this case here, this means that for each and every job that happens, we misallocated a portion of the cost. So we underallocated a total of $5,400 here. Since the actual cost is 73, higher than the part that we allocated to each jobs. So later on, we'll talk about how to do adjustments on under allocation and also over allocation. So over allocation, just think of these two numbers flipped over. If we have the actual cost incurred that worth $67,000, and we actually assign $73,000, that would be a case of over allocation. Exactly. We'll be transferring that to cost of goods sold, but we'll talk about this a little bit later because that's the last process. Okay? So here you just have to know that there may be a difference between the costs that you actually assign to different jobs and at the year end when we realize the actual cost that incurred. Most likely there will be a slight difference between the two. So at year end we'll be transferring the cost, doing an adjusting entry. So if the part that we assign is too less, it's called under allocated. If we assign too much to each jobs at year end, we figure that we assign too much is higher than the actual cost. It's called over allocated. We have to adjust both situations at year end. Okay, let's take a look at an example. Before we move on to the last part of sales, take a look at the example. Let's say this furniture company has a detailed breakdown of all these costs incurred. You have wood, nails, glue, depreciation, indirect labor, depreciation on delivery trucks, workers' wages, and try to pick the ones that you think falls under a manufacturing overhead here. Okay, let's classify these costs as shows in this example. So what is wood? Direct materials, we have $250,000. What is nails, glue, seam? Indirect costs, right? Manufacturing overhead. Remember, we purchase it in and then we transfer it to manufacturing overhead, indirect cost. Depreciation on sauce. Depreciation is also manufacturing overhead cost, indirect cost. Remember, depreciation, utility, rental, property taxes. Indirect manufacturing labor. Very obvious, it already has the indirect term in it. Depreciation on delivery truck. Is this part of the categories here? Delivery truck. Delivery is related to sales, right? Sales, administrative part, operating expenses. So we're just taking care of manufacturing side here. It's still a cost that incurred for this business, just not in this category. Okay? Now anything related to the term delivery will not fall under the cost that we need to take care of in these few chapters. They're all operating expenses, which you learn in financial accounting, right? Okay, assembly line workers' wage, wages payable, direct labor. Right. Okay, so really the ones that we need to take care of here is these three. Manufacturing overhead, 3 categories. Okay, so a total of 69,500. Why don't we include this? This is assembly line will be direct ones. I'm sorry, it should be in work in process. Okay, so a portion of the direct falls into the work in process, direct materials falls into work in process as well. Okay. Okay, now we talked about determining a rate and then multiply by actual hours, or either labor hours, machine hours, to determine indirect cost. Well, let's take a look at a basic example here, assuming that the problem already gives you the determined rate, predetermined rate for indirect cost. Tells you that job 303 includes material cost 500, labor cost 430, and now you have to decide what is indirect cost that falls into this job. After deciding that, add the 3 categories together, decide what's the total cost of this job. Want to try?
The answer?
Yeah.
1,446.
1,446. So tell me what you got for this.
So it says 80% direct labor cost, so I just multiplied 430 times
1.20. 1.20.
I multiplied.
The rate is 80%, right? So it will be 80% of this. So you use 430, that's correct. So it would be 0.8. It would be multiplying 0.8 here. Okay, because it's 80% of the direct labor cost that actually incurred. Okay, so the portion of manufacturing overhead you will be getting 344, right? So if you add all these up, okay, so when you read the problem, understand what is the allocation base. Here the base is direct labor cost. Okay, once you know this allocation base, this is the actual cost incurred for this job. You multiply by the predetermined rates. So this is a simpler problem since it just directly gives you this rate. And remember, this rate comes from estimating the total manufacturing overhead cost divided by estimated direct labor costs. Okay, let's move on to another question and then we'll go on to new entries. Here, this might look familiar. We just talked about the first set of this problem earlier. How do we assign direct materials, indirect materials, and how do we understand it from this T account? So the same numbers here. Remember we talked about materials, labor. Continuing on that, how do we determine, based on looking at these T accounts, what's the actual number of indirect costs? Manufacturing overhead. And what is the portion that is allocated? All the information is here in the T account. Okay, you just need to pick the ones that answers these questions. Want to try? Okay, what's the actual cost of? And you got it from adding up all the manufacturing debit side. 3,400, 12,000, 36,500, and you said 51,900, the actual cost, right? Okay, so we want to try the allocated ones. 53,900 because it's on the credit side, right? So if it's on the credit side, you reduce manufacturing overhead account, and you can see that it has been transferred to work in process, the left-hand side. So work in process now is completed since it has direct materials, direct labor, and the indirect costs assigned to it. So yes, this would be 53,900. Over allocated, how do you know it's over? Credit side is higher than the debit side. Okay, so credit side is the allocation amount. If it's higher than the actual amount that occurred, then it's over allocation. You assign too much cost to each job altogether. Okay, if it's under allocation, that will be a case of flipping the numbers. You have too less on the credit side, too much on the debit side. Okay, questions so far? So now if you look at work in process inventory T account, left-hand side is 3 categories. So the right-hand side would be understanding what's the cost that actually turns into finished goods. Okay, so we use this much cost, materials, labor, indirect costs, but some portion of it may be just halfway done. Yes? Say your question again. If it's over allocated, that means this is a case of over allocation.
Yeah.
So.
So like the 53,900.
Mm-hmm.
So the workman's comp is what you have to like adjust that entry to.
We'll be adjusting cost of goods sold at the end altogether. Okay, because at the end the goods transfers to cost of goods sold when it starts to being sold to customer. So we just directly adjust the very last category. Okay. Going a little bit ahead. Okay, Okay, so now let's just directly go into the remaining entries. So when we actually finish the goods, what happens? And then at the end, how do we adjust the differences, the under allocation and over allocation? Okay, so as I mentioned, to complete the entire process, remember we start from materials, assigning cost of labor, assigning the cost of indirect materials and indirect cost into work in process. Now from this category here, we want to decide what is the amount of cost that actually transfers to finished goods. What is the cost of the completed goods that's ready for sale? Okay, so this is the portion that we're trying to get to, and then at the end we want to adjust the under allocation, over allocation part. So first of all, when it becomes finished goods, assuming the total cost is $644,600, after calculating, measuring the cost of the completed goods. So of these three categories of cost, the actual cost incurred that turns into finished goods cost this much, and we transfer it over to finished goods inventory account. So this is the first entry there. Finished goods inventory, you can understand it the same as the inventory category you learned in financial accounting. But at that time, we were just talking about merchandising companies. And when we purchase the inventory, we just directly debit inventory, credit accounts payable, right? So this finished goods, the reason why we have finished goods in front of it is because we have many different types of inventory, so I don't want to confuse you. But here, really, the finished goods inventory, this is the part that is ready for sale, just like the inventory term you learn in financial accounting. Okay, so once we transfer this over, this is ready for sale. As sales happens, we will transfer finished goods inventory into cost of goods sold as it happens. Every time we make sales to customer, we have two entries, remember? Sales entry, two entries. One is related to the retail price. This, we haven't been talking about this, so just assume this retail price is set at this number. The cost of the product that we're selling to customer, this amount, and we have two entries to make whenever we make sales to customer. So this portion here, of all the finished goods that we made, we sold out a portion of it, $594,600. We reduced this account from finished goods inventory, transferred to cost of goods sold. Meaning right now in our warehouse, we just have the portion of it left, the differences. Okay, so from work in process, a portion of these halfway done inventory finally turns into finished goods. We transfer that part to finished goods inventory account. These are the goods readily available for sale. Once we make sales to customer, we transfer the portion of those goods into cost of goods sold category. Because it's no longer there in our business. It's actually in the customer's hand right now. Okay? So when it comes to year end, again, we go back to the allocation issue here. When it comes to year end, we want to somehow, some way adjust the portion that we either misallocated, we allocated to less, or the portion that we over allocated. So we adjust it based upon cost of goods sold. Okay, so the difference is we go back to this example again. The actual cost is $73,000. And we were able to predetermine a rate, allocate a portion of indirect costs to each and every job, add them together. This cost is $67,600, the portion that we actually assigned to jobs. So the part that we missed, $5,400, is the part that we under allocated. Now we want to assign these costs all together to cost of goods sold at once. When it comes to year end, we calculate the actual cost, compare it against the cost that we assigned. Differences we adjusted to cost of goods sold account. Okay, so how do we do this? This is what the entry looks like. If it's under allocated, that means we assign two less costs, so we want to increase cost of goods sold expense account. So we would debit cost of goods sold, and then the part because of under allocation, the credit side is too less. We credit additional 5,400 altogether. So basically, we're closing out manufacturing account, manufacturing overhead account. So theoretically, we're hoping that the predetermined rate multiply all the machine hours that incurred along the year will give us the same number as $73,000. That's our goal. But at the end of the year, most likely we'll be missing a few $1,000s or a few $100s. So the difference is we increase cost of goods sold expense altogether if it's under allocation. Okay, because this is still a cost of doing business that we didn't consider earlier. This entry here is a case for over allocation. If we allocated too much in each of these job orders, we take some of the costs back. So we reduce cost of goods sold expense account. Flip over the situation of under allocation. Okay, this is a year-end adjusting entries. Remember, in financial accounting, you also learn a lot of different inventory adjusting entries. Inventory shrinkage, if there's missing inventory, how do we adjust it? Usually we also adjust it by cost of goods sold. So same theory of how we do adjustments for the topics being covered in financial accounting. Manufacturing side, if we have under allocation, over allocation, we also adjust cost of goods sold at year end altogether. Okay, questions? Yes. No, we just directly adjust this part at the end. Okay, because this part we already assigned, we reduce this part, the portion, whatever that turns into finished goods, right? Then this part we transfer to finished goods, and then a portion of that gets sold to customer. So we just adjust all together at the end, the very last category. Okay? Okay, if no questions, let's work on an example that applies how to decide the predetermined rates, the portion that we're assigning to jobs, and at the end, how do we allocate the differences between assigned cost and actual cost. Okay, so your first question here, try to calculate the predetermined assignment rate. how do we calculate the rate here? What's the numerator? It's the estimated manufacturing overhead cost, $115,000. Then we divide it by an estimated labor cost. Yes, labor cost, 71,875, which will give us 1.6. So how do we understand this 1.6? Of indirect costs assigned to the job, exactly. So for every dollar of direct labor cost incurred, there will be $1.60 assigned to that particular job. Okay, so if there's $10 incurred, there will be $16 of indirect costs. 100, there will be 160. Okay. So for this journal entry here, the second question, if we want to allocate overhead cost based on the rate that we just calculated, how do we do that? What do we debit? We would debit, here we're trying to assign indirect cost to work in process, right? We're trying to allocate it. Since if a job completes, we need to calculate the cost. We have materials, labor, and manufacturing overhead. So we'll be crediting manufacturing overhead transferred to work in process by the amount of how much? Remember, we just calculated the rate here. So this rate is useful for $116. How did you get your number? By times the actual direct labor cost, $73,000, exactly. So that will be the number of the second entry here, 116,800. Okay, the rate that we just calculated is used for multiplying the actual machine hours or labor costs. Depends on the problem. If the allocation base is direct labor cost like this, you multiply the actual labor cost incurred. If it's machine hours, multiply by the machine hours incurred. Okay, and the entry here, we're trying to assign the cost to work in process. Complete the work in process T account, the middle part. So then now the work in process will have materials, labor, and indirect cost. Okay, now keep the numbers here. If we have two more questions on the same problem, use a T account to determine the amount of under allocation, over allocation. Same problem, continuing using the numbers that we just calculated. And prepare the entry to close manufacturing overhead account, meaning to adjust the under allocation and over allocation. Okay? Okay, so if we want to fill out this T account here, what number should we put under debit? What should we put under credit? Debit. We have one number for each, right? So if we open up a T account called manufacturing overhead, and we want to determine the part under allocation, over allocation, definitely we have two numbers, right? So the debit side, allocation is the credit side, so that would be this number, right? 116,800 that we just did, that we just assigned, this is the allocation part. What about the debit side? 119, and what is this? The actual cost incurred that we only know by year end, December 31st. So this is the cost that we assign to different jobs, and do we have under allocation or over allocation? Under. We assign two less costs to the jobs, so we have a balance here. Yes. Yes, 2,200. 2,200. So what do we do about this number? We need to increase cost of goods sold. So we will be debiting cost of goods sold by this dollar amount, 2,200, and we would credit 2,200. Okay, the whole point of doing this again is to adjust the costs that we allocated short to those job orders. So the actual cost is 119,000. We only assigned 116,800. So the $2,200, the under allocation part, we adjust and increase cost of goods sold altogether at year end. Okay, so at the same time we reduce manufacturing overhead accounts, zero out this account. So we close this account as well. Okay, so this journal entry only happens at the very year end. At year end, when we actually know the cost incurred, compare against all the costs that we assign throughout the year. This is an adjusting entry that happens at year end. Okay, so up to this slide, we actually completed all the process of manufacturing companies' costing system, of job costing system, job orders. So next, we will talk about process costing. Before that, we need to go over another type of company, service company. Okay, so what we covered so far, Tuesday and today, we covered the manufacturing side, materials, labor, indirect costs today, and then transfer to work in process. The portion that turns into finished goods transfers to finished goods inventory account. Then when it gets sold out to customer, transfers to cost of goods sold. And at year end, compare the under allocation, over allocation, do adjusting entries. This is today's, what we covered so far, and also Tuesdays. Now if we turn to service company, you can expect that it will be a lot less complicated, right? Because we don't produce our own product, we don't manufacture it, we don't purchase merchandise, so we simply provide time, skills, knowledge. Okay, this is the feature of service type of company. So a lot less complicated. We just have two slides on this. Okay, there's no inventory, so we don't need to take care of work in process, manufacturing overhead. There's nothing related to that. The most important cost for service company would be labor cost. So it would be the people you hire. That's the most important way to generate profit. These people deal with the clients, the customers that comes to you, your company. So again, it could be auditing firms, financial consulting services, insurance companies. I'm sorry? Hospitals also, yes, service type of business. Okay, so here's just an example that the reason why we also need to cover service company, because we still need to charge these clients, these customers. And different clients has a different background, has a different need, so we cost them differently. Audit firms, again, if we have audit team, we may have a different number of audit teams members, depends on different public traded companies. Larger companies, you may need larger size of audit teams to take care of sampling, and going over their inventory, making sure what's listed on financial statement is the proper rate. Okay, so here's just an example. A client, let's say job number 19, cost is $6,000. We need to determine a market price and charge customer in order to generate profit, let's say $9,000. Okay, so what we're trying to understand is how do we determine the cost, the $6,000 part of this example. So the main questions will be, what is the direct labor cost incurred? How many people you hire? What are their salary? What's an hourly rate of payable? How do we determine the employee's cost? That's the most important question. The second question will be all the remaining indirect cost. Okay, so this is very similar to all the operating expenses we talked about. All the administrative office expenses, supplies, utility, rental. So we just have two main categories for service company: direct labor and all the remaining indirect cost. Okay, so again, this is the main part where our revenue comes from, because we need people to help us deal with clients' issues. All the other costs, indirect costs. Okay, so how do we determine direct labor cost for each and every service agreement with different clients? It depends on how many people is working in this team. It depends on how many hours they're working in this team. Okay, so even though you have a salary contract for each and every employee, they work for different types of jobs, work with different clients, and we want to specifically charge clients at a different rate. So we need to know how many hours these employees have been working for particular jobs, particular orders. Okay, so we would calculate each and every employee's hourly pay rate, then multiply by how many hours they work on job A, job B, job C to determine direct labor costs. Okay, hourly pay rate multiplied by how many hours they actually work for this job. This is the direct labor cost part. Now, what about indirect cost? How do you think we're able to get to indirect cost and assign to different jobs?
Not 100% sure, but that would be expenses.
All different types of expenses, rental, utility, that's a portion of indirect costs. Yes? Insurance is also part of it, definitely.
The direct cost would make maybe it's the proper health insurance or liability insurance for the workers.
Those falls under indirect costs, right, altogether. So you know, you could expect a total indirect cost, right? But how do we assign it to jobs? So that's the question over here. You want to try?
It's like it's 2 steps. So it would be what would be the estimated pay per year of that person over the level of hourly work.
Very close, very close. You have an expected working hours, but the numerator part will be using the expected total indirect cost, which is very similar to what you said. Yes, very close. So basically this looks exactly the same as how we assign manufacturing overhead costs for manufacturing companies, right? So we first of all select an allocation base, which again, service company, the most important allocation base is how many hours the employees are working in different jobs. So you expect the total labor hours and you expect the total pile of indirect costs. So use those hours to divide the indirect costs. First of all, figure out a rate, indirect cost allocation rate, and then you simply multiply that rate by the exact number of hours the workers has devoted to each particular job. Okay, so this indirect cost portion really is the same logic of how we assigned manufacturing overhead costs in manufacturing job orders. It's just here we're shifting our focus to service company, so the allocation base is not based on machine hours. We're not using machines to produce products here. It's only based on direct labor hours or direct labor costs. Most likely is hours. Okay, so we expect upfront, beginning of the year, we still don't know the exact indirect costs because remember, again, utilities, rentals, depreciation on furnitures in the office, you cannot really calculate an actual number in the beginning of the year. So we do an estimation and divide it by the expected labor hours that will be devoted to your company in different jobs. Figure out that rate multiplied by the actual hours incurred. Okay, so the bottom here is an example. Let's say particular client's case, all the employees together worked on this case for 14 hours. Then first of all, direct labor costs, you multiply by the employee's pay rate in their agreements. And then you multiply the 14 hours by the indirect cost rate that you predetermined. Add them up, this will be the cost of this particular service to this client. $50, let's just assume their salary divided by the total expected working hours is 50. Okay, so this number, if you go back to read the chapter, you'll see how the annual salary is. Okay. Okay, and that's all for service company. Direct labor costs, indirect costs, determined pretty much the same as manufacturing overhead. Okay, the last exercise here, try to work on this problem, and that will be the end of today. So you have the salary for a Sawyer employee. The expected hours is 18 hours per year working hours. First of all, determine what is the hourly pay rate, and then what would be the cost for this client 507's case. You have it already? $50, $58 hourly rate, right? So $104,400 divided by 18 hours. So once you get that, you multiply by, so the second question, I'll give you a minute to do this. How'd you get that? Per hour rate is $58, and the total hours devoted to this particular client's job is 12 hours, right? So you just multiply them, you get 696. This is the direct labor cost part. Okay, so if this problem has additional questions, tells you the predetermined indirect cost, estimated, predetermined total hours, working hours, then you will have to calculate indirect cost as well. Okay, but this is only related to direct labor. Okay, any question for me today? Not this one? Sure, sure. Okay, if no questions, that'll be the end of today.